cool. So yeah, first strategy call, strategy session, going over the first major section of like the plan, order flow ranges, yeah? Like literally without order flow ranges, how can you do anything? Like how can you do any top-down analysis? How can you get into entries? You can't do anything until you understand how to map up order flow from high time frame down to low time frame order flow ranges. So that's the most important thing to start off with. So yeah, it's going to be recorded for people, obviously deleted at the end of the week on some days. So it pushes you to make sure you rewatch it as many times as you need to, write everything down, write all the notes down, and smash it out, right? So I'm going to share my screen and just let me know if you can all see. Yeah. Sick. Okay, so let me talk to you about this for a second, right? So this is what I used to do, okay? Like I used to use structure mapping, and if you can all see this, structure mapping, I used to do this back in last year, like doing it with like a daily time frame, using the pip sizes and stuff, pullbacks and all that stuff, 4-hour, 40 pip pullbacks, and all this stuff, right? But literally, the market does not give a crap about your pullback, your pips, and all that stuff. Structure is fake, anyways. It's subjective. It's not a real thing, right? It's not real facts of the market. And what I like to do is understand what is the real facts of the market and how can I make trading as less subjective as possible. Yeah, keep it as objective as you can. Keep it as simple and actually systematic and objective as simple as possible, right? When it comes to like structure or like trend lines, Fibonacci's, RSI, EMAs, all these indicators, yeah, it's all fake, it's all concepts, it's all man-made, yeah, it's all like a theory, right? And theories can be made up, theories can be changed, edited, modified, whatever. Instead of 100 pip for a pullback, I could say this could be 120 and make that a rule. Instead of 40 pips, I could say 30. Like it's all different. You can make it up whatever you want, right? So I don't follow structure. I don't mark up swing points like this I used to do, right? Because it's not needed, right? And another thing that's not needed is the daily time frames, the weekly, the monthly, all that stuff. All these daily, weekly, monthly time frames is just not needed. All right, literally, it's pointless because how can that help me? And how has it ever helped me to actually catch my trade today? Yesterday, day before, like it doesn't help me to catch my trade. Yeah, I'm not swing trading. I'm not trying to go for the moon. I'm not trying to swing it to the floor. No, like there's no point. I don't need to swing it to like daily supply and demand zones. So why is it important? So if something is not important or needed, don't even have it on your charts. Don't even mark it up. Don't even care about it. All right. Literally, you shouldn't even give a crap about it. Only mark up things. Only have things in your charts that you really do need. Yeah, in your trading. So it's not structure. It's order flow. Right. People always say structure is king, but for me, it's order flow. Order flow is king, especially the high time frame, which is 4-hour order flow. And then I use 15-minute order flow ranges, which I call LOFRs, right, to assist me with the 4-hour, right? So 4-hour order flow ranges is my real trend, right? So when I say pro trend or counter trend, right, or like always knowing what two phases of the market you're in, you're either in this impulse phase or the correction phase, the impulse phase or the correction phase, okay? So you're always in two phases of the market. And using the 15-minute order flow, right, the LOFRs, the low time frame order flow ranges, is assisting me, is helping me into catching either one of these two phases, right, in this impulse phase or the correction phase, right, using the 15-minute order flow to continue selling, bearish, sell, yeah, all the way down until we switch, right? We get an order flow shift, and now we can look for buys. As a little pullback, yeah, knowing that this is pullback, right? Regardless, though, I'm gonna make sure the trades go to at least 10R, like has potential to go at least 10R, and try and capitalize on my 10R trades. Yeah. So that's a little overview. So yeah, 4-hour and 15-minute order flow ranges is literally all I care about. Like obviously the 5-minute as well, which I explained in the chats. 5-minute ones, 5-minute ranges, 5-minute chocks can be used only in the 4-hour zones. Yeah, 4-hour supply or 4-hour supply, 4-hour demand zones. I'll use a 5-minute just to be able to catch the reversal, catch the buy or the sells. Yeah, but I'll talk to you about that after. But yeah, in terms of structure, I never use this anymore, right? All about order flow, because order flow is a real thing. Order flow is real facts of the market, because the flow of sell orders and the flow of buy orders It's how the market moves, how the market operates. Like there's sellers and buyers. That's a real facts of the market. Yeah, it's not structure. Like order flow makes up your structure in the first place. Like without order flow, there is no highs and lows. Like there is no structure, whatever you're calling structure. Yeah. And without order flow, there's no liquidity. Like order flow is number one, and then liquidity is a byproduct of order flow, right? The flow of buy orders and the protection of buy orders are in turn generating sell side liquidity or buy side liquidity. Okay. So I like to look at the facts, and the other thing as well is about the wicks and bodies. You know, people say like a wick is not a break structure. You know, it's just a liquidity sweep and all that stuff. Like it has to be a body closure, like for you to ever say it's a break. How can that make any sense again? So like I said to you, the facts of the market is buyers and sellers, supply and demand, right? When price goes higher, is because there's more demand than supply in the market, so price will go up, right? When price goes lower, it's because there's more supply than there is demand in the market, so price goes down. Okay, so it doesn't matter if this is a wick or body breaking below this demand, right? It doesn't matter if you call it structure, you call it order flow, you call it demand, right? You can call it chocolate, banana, ice cream. Doesn't matter what the fuck you call this, okay? It's just a name. It's just a word. Everyone has names and words for every single thing. There's about 10 different names for like inducement and stuff, right? It doesn't matter what you call it. If a wick or body breaks below this low, it's not invalidated, right? There's nothing left. There's no demand left. There's no orders left in this area, right? You're no longer going to use this as a POI to buy from, right? So like, it's a fact of the market. Sell orders have traveled below all of these buy orders, right? Invalidating any buy orders that were left in the market here, okay? So like, and as well, people, you know, say like, oh, it's just a wick and I want to see your body, but don't you know that every single, at the lower time frame, it's going to show your body, right? For example, just like here, yeah? Let's just replay it to here and right. So this AKA meant to be your structure, right? And then people be like, oh, you know, this is your structure low and this is just a wick breaking below. So it's not really a break. So now this high must be weak. Yeah. Again, how can I make any sense when, like I said, supply and demand is real, right? As in, if there's more supply in the market than demand, the supply will travel lower, right? The price will go down, right? So then obviously this price has pushed down, right? The supply, right, has overcome any demand here. Yeah. Sell orders have overcome any buy orders. Same like if you had your stop loss right here, and a wick comes past your stop loss, what's going to happen to your stop loss? Obviously, it's going to get smashed straight through. Yeah, you're not going to be in a trade anymore, right? What are you going to do? You're going to call your broker and then tell your broker like, oh, the body didn't close, so why do you stop me out? How can that make any sense? Yeah, they're going to laugh at you. They'll be like, what the fuck are you talking about? You know. So again, if you want to see a body, like, oh, you know, on the lower time frame, magically it's turned into a body. So now you're confused. Now you're thinking, oh, like, I don't know now. Has it broken? Has it not broken? Is it a wick? Is it a liquidity sweep or is it not? But don't you know that liquidity sweep and the break can happen at the same time? It can be two things at the same time. Like every low and high, every structural low and highs have liquidity resting above and below because someone has to buy from here to push price higher and break supply, like overcome sellers, yeah? So obviously they have orders resting below. So it doesn't matter if it's whatever it is, like every high and low has liquidity and it's also a break too, yeah? So it can be two things at the same time. The only other time I'm gonna say like, oh, it's just a liquidity sweep, it's only and only after it's taken out the low, it takes out the previous high, you know what I'm saying? So like until it's taken out the high, you can never assume, oh, this is just a sweep, you know, on any time frame, right? The market is fractal. Like you have all these time frames here, right, to assist you, to help you, like to you use it to advantage, you know. Like the market's fractal, doesn't matter what time frame you're using, the price is not going to change. All of this on the side here, all these price points, right, 1.12s, 1.15s, and all that stuff, this is all real. Yeah? This is how we are looking at price moving up and down on the charts, price points, yeah. So it's all about price interacting with price, yeah. This high at this price point at 1.16905, this price is not going to change if I use daily, weekly, monthly, 5 minute, 1 minute. It doesn't matter. This price is still going to be the same price. This low is still going to be the same price this wick. Yeah. So it doesn't matter if it's a wick or body. Okay. I'll answer any questions just like after. Give me a second. Let me just check if you have any questions. 1 second. Does everyone understand what I'm saying? Yeah. Structure is bullshit, flow is everything. Structure is a derivative of order flow, extra steps to solve courses. So if it does a chuck, it is a valid sweep. Yeah, exactly. When it chucks the other direction, then you can see like, oh yeah, now it's swept liquidity. But until it hasn't chucked the other direction, right? You can't just assume, oh, it's just a sweep. Yeah, you have to assume that we're still bearish. We can still go lower, right? Which actually did, And literally, this is where I took the best sell of my life from, like from this area right here, right? If I didn't classify this as a break and I was gonna assume like, oh, this is gonna get run, right? I wouldn't have been able to sell from a weak high then in theory, yeah. But for me, this was your 4-hour order flow inside, and it was my strong high. I sold it inside of here on the 15-minute and everything, and the sell from there to there was 1,100 R. Yes, okay, perfect. So if there's a wick, then a chalk. Is that tradable sell for you? Yeah, obviously, yeah. Like a wick and chalk or body and chalk, like it doesn't matter, Like it's broken down, it's broken up. So if that's the valid setup that you're looking for the entry, then yeah, that's it, right? So let's talk about delete that, right? And talk about 4-hour order flow ranges, okay? Because that's the main thing I'll start off with. Literally, like my analysis can take like no more than like 10 minutes or something, even sometimes 5. Less is more, try and not spend as much time on charts. You just need to make sure you have like a set rule guidelines of like how to analyze, how to do top-down analysis, and then just put your alerts on, wait for the best areas to buy and sell from, really. Every time you come into charts, you should always know 2 things. You should always know where's the highest probable area to like sell from, or where's the highest probable area to buy from. And that's it. You put your alerts and you wait for buyers to come to you. Yeah. So in terms of 4-hour order flow ranges, right, that's my main step at the beginning, is how to map out 4-hour order flow ranges, okay? And 4-hour order flow ranges, in the word itself, range, what does a range mean? A range is a series of candles, meaning it has at least a couple of candles inside of a buy to sell range before we break that low. Yeah, one candle, it's just like a supply zone, demand zone, whatever, yeah? But a range on a 4-hour high time frame, I want to see at least a couple of candles inside of this range, right? And one of them has to be at least bullish, because the opposing candle, yeah? So I want to see at least one opposing candle pushing the price up, right? Another candle inside the range, and then we break the low. So that makes your sideways range. And I want to see that properly formed range for me to consider that's like a strong enough high and low of the 4-hour order flow. So for example, can you see how price is coming down, all the way down to here, yeah? And then we push price up here, we have this pullback, yeah? And then we break the low, okay? So inside of this range right here, this sideways range, we see at least a couple of candles in the range. For example, the way that we pull back here, it's not from here to here, yeah? It's from here, we pull back to here. Same like this low to this high. We pull back like this, yeah? So what I don't do is I don't classify this candle as one candle, and I don't classify the one that breaks the low as well, yeah? I want to classify all the candles in that range, right? And just need to have at least 2 candles minimum in the range, and one of them has to be bullish, the opposing candle. Meaning like if the order flow is bearish, one bullish candle has to be at least present inside of that range, right? For me to say that, okay, we have tried to push price up, like demand has tried to push price higher, trying to overcome supply. However, the supply has overcome demand and it's more powerful, then it breaks the low, yeah? So I want to see the interaction, the battle between the two, yeah? So as you can see from this range, this low to this high to the break, we have one candle here, right? We have one bullish, so we got 2 candles, we got 3, 4, and 5, yeah? So we have 5 candles in that range. One of them is bullish, right? Pullback, break, so then that's my high, and then my low is obviously wherever we get the next pullback from, yeah? The low, pull back again, break the low, pull back and then break the low. So again, this is my new range because this is your low. We pull back 1, 2, 3 candles that we got inside of this range, and then the 4th one breaks, yeah? So I don't obviously class the one that breaks it. I don't class the lowest wick. Saying like this is the lowest wick. I don't class this, and I don't class this. Yeah, 5 candles in that range. One of them is bullish. 3 candles in this range. One of them is bullish. Right. So this is how I map up all the ranges on a 4-hour order flow. So it kind of takes away like all that subjectiveness. And as you can see, we are just following the flow down. Right. One candle in the range here is not good enough on the 4-hour. On the 15-minute though, it's fine because I'm going to show you why. But on the 4-hour, I want to see bigger ranges, like more stronger ranges that is not going to chuck every second, right? Chuck down, chuck up, chuck down, chuck up. I don't want to see that happening, yeah? I want to see follow through. I want to see expectation order flow following through, right? That leads you to high probable trades, okay? So, that's my high, this is my low, that's my high, that's my new low. Again, all this massive pullback and break the low, right? Again, it's a wick break, yeah? And people are going to be like, oh, this is a weak high now. But no, why did it continue lower, right? Because the order flow is bearish, like, there's no denying that, supply has pushed price down and broken demand. So supply is in power, right? So this is your new low right here. Again, we pull back here to here, yeah? And then we break the low. We pull back and break the low, right? Can you see how, like, ultimately we were just heavily bearish, like all the way there. It never broke bullish once, yeah? So as you can see, people are a bit confused on this one maybe. So this is your low. We have one bullish candle. We have 2, 3, 4, 5, and 6 candles inside of that range, okay? The lowest wick again, when it pushes price down, is this low, right? Then we pull back again with this one bullish candle here at least. Then we have 2, 3, 4, 5, 6 candles in this range, yeah? So that's what makes my 4-hour order flow ranges, all right? So at the moment, do any of you have any questions? Is this pretty clear?
Yeah, it's clear, mate.
Yeah, nice one.
So is the low before the retracement up not part of the range?
No, like, you mean this wick?
Yeah.
No, I'm not going to classify that. I need to see it pull. I need to see it from here, pull back, all right, and then break, yeah? Then that's my range, right? This candle here is not classified in that range, Make sense? Yeah?
Yeah.
Perfect. So I'm going to show you some more examples, yeah? All this price action, I don't know if everyone was like looking at EU at this time, because I used to trade EU obviously all last year. And, people were saying like, this is very messy price action, but it really is not. It's very clean, very clean. Classify, well, clear, can you please clarify bullish and bearish candles? So as you can see, like, this is your bearish candle, part of this pushed price down. Then we push price up, right? This is your bullish candle, yeah? So at least one candle in this whole range of price has to be bullish, right? Because I want to see it pull back, right? When it's just like bearish, that's not a pullback. That's not showing me like, demand is really trying to push price higher, right? I want to see that, yeah? So does that make sense? Yeah, one bullish candle. Yeah, all right, perfect. So continuing on from here, we break bearish, yeah? And what did I used to have for structure, and everyone probably had as well, is that literally that this was your high, this was your low, this was your weak low, this was your strong high, this was your range, yeah? So people were thinking, okay, structure bearish, price, it has to do this, it has to melt off, right? The expectation order flow is bearish, yeah, to break this low. But then why did we break bullish? Yeah, why did this happen? Because you're failing to understand, like, order flow is ever changing, yeah? Like, the order flow, the flow of orders is not going to contain and stay in one place, is it? It's not going to maintain there, like, it continuing to flow. There's always orders every second, every day, every minute, right? So it's not going to just stay here, right? There's no strong high and weak, like, there's nothing. Like, there's no protected high, there's no structure high like this, no. Like, the order flow is no longer from here to here. It's like it continues to make these lower lows, lower highs in terms of order flow, and then breaks bullish here, yeah? So now the flow has changed from this bearish flow to now bullish flow, yeah? So we have a bullish order flow, we pull back and continue bullish. Surprise, surprise, like breaking this high, yeah? So now we are bullish, right? And this low as well came from a high time frame for our demand zone on the left, yeah? Yeah, the Zoom recording will be available till next Sunday. Yeah, that's fine, yeah, it will be. So you can rewatch it. I'll upload it just later on today. So yeah, like I said, this low actually as well came from a high time frame for our demand zone. So obviously we'd be looking for entries in here, but it's also what helped assist into this massive push up, right? A lot of unfulfilled orders on the left, on the high time frame, bigger picture scale. So when we mitigate high time frame, that's why high time frame is king, because high time frame has more stacked orders, on a high time frame, bigger scale of things. Yeah, there's more orders stacked in here than there would be on a 5-second chuck or 1 minute. That's why you see what 5 seconds chucks every second, like up and down, right? It's just there's there's not much going on. There's not much orders resting there on a high time frame though. That's why you see it like protect. You know, it's high time frame. The bigger picture, the bigger ranges, it protects them and continues to follow through. Yeah, there's more stacked orders in here. So like you know, when the BFIs, they have to buy up to sell down, right? So when they are in these when they stack these buy orders in the market and then push price down, right? All of these buy orders are obviously now in drawdown, isn't it? It's like when you have your buy position here and your stop loss is here and price is all the way down here. Obviously, this if you don't have a stop loss, your flipping trade is all in drawdown, you know. And if they want to mitigate out of the orders to continue low pricing, and you know, what does mitigation mean? Mitigation mean you're mitigating risk, yeah, like you're taking risk off. How do you take your risk off? Is by coming back to close out your orders to continue lower, yeah. So like I said, order flow was bullish from here and then switches bearish again, yeah. It's a wick as well. That's fine. Like people are gonna be like, oh no, this is now weak, but no. Like why did it break right from here, pull back into the supply, and then continue to go bearish? Yeah. Again, it broke with a wick. People are gonna say, oh, this is now weak high, but no, again, it pulls back into supply, again, continues to go bearish. Yeah. So like you wouldn't be able to sell it from these areas because you're thinking, oh yeah, we're gonna go up to the moon. Yeah, we can break all these highs. But I sold it from these areas back on you because I understand like order flow is king really. Like, you know, order flow is what makes everything. So I'll follow order flow till I'm wrong. Yeah. And that's what we should be doing. It's to get high probable trades, to be on the right side of the market more often, is to keep following the flow, not trying to sell it against it, sell like always counter order flow. No, it's so much less probable, you know, like, you know, it really damages your strike rate and you take so many losses trying to get in sell here and prices just continue to go up, yeah? And you're trying to sell. It's just crazy. Yeah, exactly, swimming downstream. Exactly, like you're fighting against the flow of orders. You're standing in front of a moving train coming towards you, right? And you're gonna get run over. Like, so just follow the flow, be patient for like the pullbacks into like discount and everything, and you know, follow it, keep following it until you're wrong. Yeah, meaning until this switches bearish, and then maybe you might see low pricing. Yeah, so keep following until you're wrong. So let's continue. All right, so I'll show you this one here. So what I used to have for structure was like this to this, this to this, this to this. All right. So like, you know, I used to be like, okay, this is meant to be my new protected low. This is meant to be strong. It should never break this low. We should continue high pricing. Well, why did it end up breaking the low? Because of order flow. Like this is no longer no protected low. In theory, actually, I'll show you why it's actually more of a weak low than anything. Because people say, you know, this is meant to be strong and protected, but failing to understand the order flow is no longer like here, is it? When it continues to go from here bearish then bullish, right? Then it mitigation, continuation, yeah? And look at these bullish order flow ranges up here, right? So like I said, look at these bullish order flow ranges here. We was bullish, right? And then switch bearish. So look at this change of character right here, yeah? This is very, very important, right? Because you see now, right? Here was your bullish flow, right? What we should be doing, obviously looking for buys, yeah? Personally, I took 4 buys in this price action following this bullish order flow, and personally made 71% profit on my personal account that one session in New York, just catching buys in here on my personal account. You know, just again following the flow, yeah. So this was bullish all the way up, and then like I said to you earlier, we switched bearish here, yeah. When we switched bearish, look what happened: pullback, continue bearish, pullback, continue, right, all the way down, literally bearish. Look how amazing, right, this bearish order flow is, yeah. Imagine the sells from all of this, yeah. Imagine all the sells that you could have been taking, but what's everyone thinking? Oh yeah, we are bullish and let's do this, yeah. Thinking like, let's go to the moon, yeah. But no, again, you know, failing to understand the order flow, right? Order flow will help you to be on the right side of the market. Structure does not. Structure is just like some next swing high and swing low points, but doesn't even mean anything really. Like the order flow shifted about 100 times within that swing points, right? So it becomes less probable, right? And like I said to you earlier, why is this actually more of a weak low than anything? Because when I said to you mitigations mean what? They keep closing out of these sell to buy orders, keep closing them to go higher, keep closing these sell to buy orders that are in drawdown to continue higher. Yeah. So when they keep closing out of the orders, what does that mean? Like there's no more demand left. Yeah. There's nothing left in the market here for the sellers to do business with. Yeah. Like for every seller, you need to have a buyer. For every buyer, needs to have a seller. So if there's no buyer for a seller, then they need to find the next available demand or liquidity pool to do business with. Then, all we're going to probably see is just like CPBs, which stands for catalyst for pullbacks. Yeah, like CPB is just little reaction points, like all these demand zones, reaction points. Yeah, but in theory, this is also generating sell-side liquidity, trendline liquidity, right? People buying from the touches, third touch, second touch, whatever, right? So it's a byproduct, right? Liquidity is a byproduct of order flow. CPB is just a catalyst for pullback, meaning like we have like demand zones or limited demand zones, which just get used as a little pullback before lower pricing. Yeah, because there's always two reactions. There's always two possible reactions from a supply demand zone, right? A demand zone, for example, it could be used as a little pullback before lower pricing, or it could be used as a cause for a full reversal, right? To go higher, right? So like, that's all it is really. Just call it reaction points if you want. Yeah. So yeah, like that's why we continue bearish. So if you were to follow order flow properly, you wouldn't be thinking going to the moon just because just AKA structure was bullish. You'd be thinking, okay, like what I could do is if we come into a 4-hour demand zone and we get a 15-minute bullish chain of character, is look for the buy as a pullback trade, yeah? Just like 10-hour trades, and easily you could catch 10-hour trades because look how many pips it give, like 45 pips, right? You're not going to have a 4.5 pip stop loss, right? Like you're going to have like 1-2, pip stop loss, so that would be around like a massive trade, 40-hour trades, right? So you just need 10-hour up, like 10-hour down, 10-hour up, 10-hour down. That you could do that, with a 15-minute order flow ranges in your favor, okay, or 5-minute, because like I said, in a 4-hour zone, you can look for just a 5-minute chalk to help you take that buy. Yeah, 50-minute is not always needed in a 4-hour zone. If it gives it, then that's good because high time frame is king, and I prefer high time frame, like obviously than low time frames, because it's more stronger, powerful, it holds more weight, more orders. So obviously I would prefer it, yeah. But like what I've seen is because it's a high time frame demand zone, it's more of a it's a good area to buy from, because it has unmitigated sell to buy orders resting in here. So we could get a reaction at least, yeah. So obviously sometimes a 50-minute is a bit too far away. It won't chop fast enough for you to catch this buy from here. So using the 5-minute to help you really is powerful. Okay, so using the 4-hour demand zones as a little pullback trades, but then you should know the real trades will be the sells, pro trend sells, yeah, the continuations, the sells or the continuations, the pro trends, and the buys are little pullback trades, yeah, little pullback trades from these 4-hour demand zones, right? Whatever. So far, does all this make sense to everyone?
Yeah, all clear, mate.
Yeah, we're good.
Yeah. Yeah, I'm showing you an EU first because it's just all like mapped up. I've already got it mapped up, but I'm obviously show you on US30 after I've explained all of this. But like, yeah, it's just very good examples. Like everything works on every single pair that I'm showing you. It's just more of a clear way to actually do your analysis, like less subjective, not having to worry about like what is this pit pullback and all that stuff.
Mate. Simple.
Exactly,
like,
yeah.
Nice and clean, mate, like you say, rather than like looking at structure the way everyone else talks it. So much more clear, mate.
Yeah, exactly. Like that's how it should be, always. Like your brain, your eyes need to have clear picture, clear charts. Like you should know like what you're looking at, it shouldn't be so messy, like have like hundreds of lines and boxes and writing everywhere and everywhere. Like literally you should have very simple, clean charts. You should always know two things: where to sell from, where to buy from, and set your alerts and wait for it. And following the order flow ranges will help you a lot to be on the right side more often because you're actually following the flow instead of like just being like, oh yeah, structure is bearish and we're expecting this to happen. So you're just trying to catch every sell, and then they don't end up working out fully, yeah, or like properly. And then you end up being on the wrong side. Okay. Let's see. So order flow doesn't care about strong or weak structure. Follow the flow, yeah. So wicks count on breaks on any time frame. Yeah, on any time frame. Like it doesn't matter what time frame you're on. Time frames are just representations of the same data. Like I said to you earlier, this price point is not going to change. The 1.1477, it's not going to change if I use any single time frame. So it doesn't matter if it's a wick or body. It's a price point. That price is sell orders, buy orders. It's not going to change. You know what I mean? So like, let's see. Structure is fake news. All demand has been absorbed. Finally understand why you meant not to sell in bullish order flow and bearish off. Well, yeah, like that's one of the major things I was saying to people in the chats is like a very simple and key plan. I mean, rule for me is that if price comes into a 4-hour supply zone, you should just never ever look for sells. You know, just simply like, I mean, never ever look for any more buys. I mean, as in continuing buys. So let's say you have a 4-hour supply zone, right? And even if your order flow and everything is bullish coming into it, whatever, right? Even though your order flow is bullish coming into that, I'm never ever going to continue to look for any more buys inside of here. As soon as we tap into this supply, I'm never going to look for any more buys, literally. Like I will look for possibly sells, yeah, if it gives me the order flow shift in my direction, right? And then same vice versa, right? So if if you are like in any buys, your final TP should realistically be there, not there, yeah, because you can't expect your order to run that the supply or whatever, yeah. Like if anything, it might give you quite a deep pullback as well, like a reaction, right, before breaking it. But I don't want to live through this pullback. Because I don't want to end up getting stopped out of any buy I'm in from here or something, like. So just take your profits and just move on. So that's why I love the 10-hour rule, because it's a fixed TP. It's very nice to have like TPs hit instead of like monitoring charts all day and taking TP1 here, then TP2 here, and then end up going to break even and losing money, like as in you're leaving profits on table. You could just be satisfied with making 10R with a 1% risk or whatever, like I do, and 10% on a trade is flipping crazy if you think about it. On 100K, that's 10K, so I do like 1% risk, 10R trades. So like I said, on 100K, that could mean 10K profit on just that one trade. So yeah, I got to break even and everything. I'll show you after in terms of like entries and all that stuff. That's on another Zoom. But yeah, like 4-hour supply, just never ever look for any more buys, right? Because you might see a bearish reaction. And same for like a 4-hour demand zone, for example. Let's just say, for example, this is for a demand zone, price coming down, right? Let's say even though order flow, for example, might be bearish, I still won't be looking for any sells, yeah? Which happened on US 30 like last week, if you remember. We was in that 4-hour demand zone, yeah, which was here. We was in that 4-hour demand zone here, and price taps into it. I don't care if you sold off like this. It doesn't affect me. It doesn't matter to me. Yeah, that was CPI news that pushed that price down, but it doesn't matter to me. I'd rather miss this, right, rather than trying to predict and sell off from a 4-hour demand zone. Like that's why I'd rather be in buys, right? And same like this one. Same thing. It gave a couple of 10-hour buys, if you remember. So like that's all you need. The beauty about the 10-hour thing as well is like it doesn't matter if you're right or wrong in the whole direction of things, in the whole bigger picture as well. Because if you can catch your 10-hour, it doesn't matter if you bought it and goes 10-hour and now goes to stop loss and break even. Because at least you capitalize on that move, right? You made a whole 10% gain on that move, right? Other people are predicting the future, thinking, oh yeah, we have to do this and break all this and do that, and then come higher and do this and do that. No, it doesn't matter to me. It shouldn't matter. Like, who cares what's going to happen in the future? Care about what's happening now, yeah? So yeah, does that make sense? Let me see. Pro trend following order flow instead of swing structure. Yeah, exactly. Follow the order flow as in 4-hour, 15-minute ranges. That's my like order flow trends. I never heard order flow is more structure. It's more than structure before mind flow. It makes a lot of sense. When 4-hour order flow range is bullish, can we trade a pullback phase when we get that LOFR bearish shock? Yeah, exactly. 15-minute shock is needed if you're not in a 4-hour zone. So for example, let's say like you see how nothing here, right, is a 4-hour supply zone. So for me to sell from here to here, 100%, I need a 15-minute shock, 100%. Yeah. But when I'm in a 4-hour zone, let's say like price came into like a 4-hour zone, and then I'm looking for the sell, right? I'll use a 5-minute, right? Only because of that reason. Okay. Do you still care whether a high or low is weak or high then? Do you care whether a high or low is weak or even weak or strong then? Yeah, I mean, like I just care about my 4-hour order for ranges, care about the 15-minute to help you, and then that's it really, just keep following until you're wrong. And that's what helps you to be on the right side more often. What's it called? Since we can't sell in demand, how would you catch those 4-hour bearish order flow sells if they're in 4-hour demand? POIs. You just don't. Like I said, like 4-hour demand. If price comes in, I'm never gonna sell. I don't care if it goes 1,000 pips down. That just doesn't matter to me. You know what I mean? Like I don't want to be catching stupid losses because I'm talking from my own experience, from everything I've done, from all testing, from all live trading, because you can test or like back test bar replay or whatever you want, yeah. But when it comes to like live trading, it's a different story. And honestly, you catch more losses, way more losses, trying to do the opposite. If you're trying to sell in a 4-hour demand, you catch more losses in the long run. If you're trying to buy in a 4-hour supply, yeah, again, you catch more losses trying to do that in the long run. So just
Do you mind
allow it.
Do you mind if we go over that real quick, bro? Because it's a little confusing.
What's that, sorry?
Do you mind if we go over that real quick?
Which part?
Like if you go back to EU.
Oh, yeah. Which part, sorry?
It's over here. So technically, like there's this demand, right? Soups liquidity and everything. So you were talking about catching the sells here, but then you just said that we can't catch those sells because it's in the demand. So do you have any rules that are like obviously we don't want to play the reaction, right?
This is the only place that's in the demand here. Yeah.
Okay. So once we push out of it,
yeah,
get the lower time frame confirmation, we're back to like sells.
Yeah, exactly. And we're already bearish, you see.
Okay.
Yeah. So then when I'm inside of here, I will never ever look for sells ever.
Right? Until we get that reaction out, or
like
it has to be outside. The POI.
It always has to be outside.
Okay.
Yeah. Always has to be outside or outside. Yeah. Just never inside of here, because at any moment it can do a bullish reaction. Any place, you just don't know where, right? So if I don't know where, then I'm gonna look for for the sell there. So it's easy losses. So do you have rules around it? Like, do we need to see a reaction first and trade once a low time frame alignment? Yeah, exactly. Like wait for it to come out. Yeah, then give you the 15-minute chalk, right? Or if you're in a 4-hour zone, for example, 5-minute chalk, and then look for the sell. Yeah. So it has to be just more high probable stuff. Could you talk about 50-minute order for ranges? Yeah, exactly. I'm going to do that after this. All about short-term sentiment. We had a 4-hour chop, so we turned bearish. Just what's to the left of the price? What if price keeps dropping and we do not return to 4-hour supply? Can we play on 15-minute POIs instead? No, like I said, I'm going to show you what I do with the 15-minute order flow ranges next. But like, if this, for example, didn't come into like a 4-hour supply or anything, right? Like, let's say this is your clean 4-hour supply, and this never made it to there, right? Regardless, right? I need that 15-minute chop then, yeah. So give me that 15-minute chop, right? That gives you a 50-minute POI. Do you see the difference? Yeah. I'm not trying to predict all the 50-minute POIs on the left and refine it down to 1 minute and all that stuff. Have like about 1 million POIs, right? And more opportunities that you see equals more available losses. Yeah. You don't realize that. Like people always think like there's gonna be 10, 20 trades a day that you can take and you can catch every single buy and sell up and down, ping pong it. Yeah. But trust me, like this is not the source. Really, is not. Like less is more, and there's only going to be between 1 and 2, sometimes 1 and 3 high probable trades in a day. Yeah, maximum. Like there won't be like flipping 10, 20. That's impossible. Like how can a market provide you that many high probable trades a day or like $100 trades or anything on a regular basis? It just doesn't. Yeah, sometimes there's nothing. Yeah, so when there's no trades a day, then that's good. That means nothing, no losses, preserve your capital, and just chill. Like do something else more productive, and just leave. Don't force a trade. Don't make your trade idea. So like I said, yeah, 50-minute. You give you the 50-minute chop first, which then provides you a 50-minute POI. So then we look for the sell from there. You see. So let's talk about, wait 1 sec. So after 50-minute shock, we use a 50-minute PR, yeah. That 50-minute shock, does it have to be in the premium discount area? Or can you just take straight off the chock with nothing else? So the 50-minute chock, yeah, like the price has to come back into the premium or discount of the 50-minute chock, the order flow range. It has to. If it doesn't, then there's no trade for me. I don't care. So you don't even look left. Only be aware of 4-hour zones. Exactly. The main thing is to mark out your 4-hour zones on the left for a couple of reasons. Means that when price comes into it, I don't want to look for any more sells, right? If I'm in a demand, and vice versa. So that's the one reason is I don't want to look for any sells. So it tells me like, I should target here if I'm in any sells already, or I should never look for any sells inside of here. And it also tells me I could look for buys with a 5-minute chock. That's the things that it tells me. So you only look to the left to see where the CPVs may come from. Yeah. Also, if you can catch all 20 trades daily, you have a big problem with what you're going to do with all the money. Shut up. So true, cash man. All them Insta traders can do one with 100-odd days. Yeah, exactly. Like, I've caught many 100-odd trades in the past as well, but it's really not, like in terms of longevity, in terms of the consistency, it's not the source. It really doesn't help you that much, Yeah, I don't want to be taking 10 losses here, 100-odd trade, 10 losses, 100-odd trade. Like, no, I don't want to be doing that, I want to have a good enough strike rate, that it helps your psychology as well, because realistically, trading is 80% psychology. Yeah, like if you can have the best technical analysis in the whole wide world, but trust me, like it doesn't help you if your psychology is not on point as well. And taking 5-10 losses, before every single win, is more damaging than you think, because it leads to so many issues, such as revenge trading, forcing trades. It's just a spiral. You go on a spiral like downhill, and your equity curve represents that. Your equity curve should not be looking like this. This is all psychology. Equity curve starts looking a bit more like this. Take some nice wins, a couple of losses, wins, couple maybe 1-2 losses, a win, couple of losses. That's something more, like more something that we're going after here. That's what we rather want. And yeah, let's see. Why don't you use 4-hour bearish order flow range on US30 from the top high of that range? Okay, yeah. So this is what I'm going to talk about after this. That's very, very important. So hold on a second. What's this shit here? All right, cool. So let's talk about this 50-minute order flow ranges. All right, LOFRs. LOFRs stand for lower time frame order flow ranges, which represent my 15-minute or the 5-minute in a 4-hour zone, right? Only. So the way that I map up 15-minute order flow ranges is the similar thing in terms of the 4-hour ones, right? Which is a couple of candles has to be in a range, such as what I said to you earlier, right here. So like I said, this low, this high, we break, right? So there has to be a couple of candles, at least 2 candles in a range. One of them has to be bullish, yeah? So the difference between that and the 4-hour and 15-minute ranges is that the 4-hour, I want to see them protect itself and continue to flow, like as in stronger order flow ranges, yeah? The difference between that and a 15-minute chocks, like I want to see that 15-minute chock happen like more often than the 4-hour, Like I don't want to see 4-hour breaking bullish, bearish, but a 15-minute needs to help me to do that, as in to continue to either sell or buy, chock bullish and then chock back to bearish for me to look for sells and then chock bullish. So I need to see this happening. I want to see that happen. So I need a 15-minute chock to be a bit smaller in terms of the range. So 2 candles is not necessary on the 4-hour. On the 15-minute. 1 candle is enough, right? As in 1 candle pullback is enough. So can you see how this high, right? This is the price pushing up. We have 1 candle pullback and then we break, yeah? Break the high and then break that low would be a 15-minute chock, yeah? 1 candle is enough in that range, right? The opposing candle, meaning like it pushed price down bearish and then bullish, right? So at the moment we are bullish from here to here, yeah? This is my 50-minute order flow range, okay? So just a sec. So the 15-minute one, this is fine. This is good enough as in a pullback. one candle push down and then one candle push back. That's fine. Yeah, that's perfectly fine. And if we break the low like this, that's my 15-minute chart. Took the high, took the low. Yeah, this is fine. But on a 4-hour, if this was a 4-hour chart, I would not classify that as a order flow, 4-hour order flow range. Right, it will still be like the one lower, for example. Okay, but on the 15-minute, this is perfectly fine. Right. And in terms of like any sort of trucks that I ever take as well, they all should look similar to this price action. Meaning like if this was a 15-second chart, if this was a 1-minute chart, 4-hour, 15-minute, whatever, doesn't matter. The price action should look like this. That we push price up, right? We push price down and then push up. Yeah. We like usually you see that gap in the middle, that separation between this high and this high. You see that gap here, right? This is very important to see that price to demand or supply, the supply pushing price down and demand, pushing price back up. Like this, the battle between the two, the interactions and stuff. Yeah, I want to see that push down, push up. I don't want to see no trucks used like this wick here, and all of these aggressive, very, very aggressive trucks that people use, you know. I don't use these wicks as trucks or anything, and I don't use inside bars as trucks. That's why, as you can see, I don't use any indicators, you know. Like, I don't even use a no gaps candle anymore because 15 seconds is clean, and I want to see like real candles. I want to see real trucks. I want to see everything legit. I don't use no indicators, just clean price action, right? So like I mentioned about the inside bar thing is that, can you see how like this candle here, right? It's inside and like it's equal highs, right? As in like this candle, this wick and this wick is equal. And if we break this low like this, then no, that's not a chalk for me again, right? This low, what I want to see is like price pushing up, push down, right? And then push up like this, yeah? And then break the high, right? And then we go and break this low, right? This would be a chalk, yeah? Such as this example right here. This is a push price up, right? We push price down and then push it up. Can you see that gap in the middle there? Yeah, you don't see no gap in between this and this. Yeah, so it's just equal highs. This one is clean chalks, right? Like this break. That would be clean chalks. Yeah. So does anyone have any questions? Like even this one, that's not a chalk as well. Yeah, taking this high, taking that low, that's not a chalk, right? I would never use these aggressive, crappy chalks. Like I want to see proper ones, right? And that's the problem with like too many entries again. You know, too many opportunities you're seeing. You're seeing every chalk in the world happening, and then you're taking about 10 losses before the real win, right? So let me just see any questions. Would you use a 5-minute there? Yeah, I would. I'll use 5-minute here because it's a 4-hour zone, right? That 4-hour POI, I use a 5-minute, right? And just the same thing, like clean chalks, you know, like pushing down, pushing up, take the high, take the low, yeah? Not this inside bar here, yeah? This and this break is not a chalk, right? Like this and this. That would not be a chalk, right? So...
Can I ask a quick question, please?
Yeah, no worries.
You see if you scroll down quickly, just go to just before.
You mean lie down here?
Yeah. Oh, I think it was on the... Yeah, you see that middle one there? You have that...
This one?
Yeah. It chopped down to tap into that POI, that extreme.
Yeah.
So even though it chopped down bearish, would you still be looking for buys even when it taps back into that bearish order flow range? Because it did kind of chop on the 15M down wave.
Yeah, this one, yeah.
Yeah, it did chop. Yeah. So
yeah,
would you just call it in, like, because your bias is bullish, you will just not count it?
No. So this is what I used to have as in like structure before, you know, like when I used to be like, oh yeah, my swing structures were this and this, but no, I don't do that now. Like, so I would not be looking for buys in here, right? As in this wick, I would not do that. I'd look for the shift in order flow on on a 5 or 15 minute to go back to bullish. Yeah.
Okay.
And then use a new range, new POI to buy from, like this one. For example,
Okay.
That's it. Okay. So what I'm gonna do is I'm gonna show you like examples on US30 just to show you, like, train your eyes on this. Obviously, go back and back test everything. Go back and rewatch the call, and then map it up yourself. So so before I show you all this, the most important thing in terms of the way that the order flow ranges break is different than structure. Like Structure, remember, used to be like, you know, breaking this high, right? This is your low and this is your high, yeah? But order flow is different, because if order flow breaks like this, yeah, one clean push, one impulse, yeah, fine, that's your low and high, that makes sense. You put your premium and discount from this low to this high, yeah? That's common sense, that's what you do. But if the order flow range breaks like this, let's say we're bearish, and this applies to every time frame, 4 hour and 15, by the way, everything I'm telling you. So let's say this is 4 hour, 15-minute order flow range, and let's say we break like this, yeah? The order flow, the range, right, the premium discount is not from here to here, okay? It's now from here to here. So when you do your premium discounts from here to here. So the reason why is because of this, yeah? This low didn't do anything, okay? Only thing that this low did was push price up to the supply or whatever. And then what really happened was we had an interaction and then push price down as a reaction. And then this is the low. This is where the real demand steps into the market to really break the high, right? So this, in theory, should be protected, right? This is the one responsible for breaking the supply, the actual range itself, yeah? And then this is the low that should be protected in order to continue high pricing. If we do break this low, right, then it's considered a 4 hour or 50-minute shock, and then maybe this could happen, all right? So the easy question to have, I've got it written down for you, is this. This is a question you always need to ask yourself and write down. What flipped and broke the range? That becomes your new low, right? It's not this low, right? This is what flipped and broke the range, okay? This is the low, right, that led to the break of the actual high, the range. So this low should be protected, yeah? So let me show you a lot of examples. It really, really helps you to be on the right side again, to already know the where the order flow range is happening, what's going to happen next, possibly, because in theory, like I said here, we break bearish, we're bearish. This is my bearish 4 hour order flow ranges, okay? So again, how did we break this high, right? It didn't just break with one clean impulse, one push up. It did this flip and break, yeah? So in theory then, this is the low, right, to be protected, to continue high pricing, okay? Like this low here, push down, push up, right? And this range has to look like a proper range as well, by the way. It can't just be like one of them little sell to buy wicks. No, it has to be a proper push up, push down, push up, yeah? So this is the low to be protected in theory to actually continue high pricing. So if we do break it, right, then I can already say, okay, we have a 4 hour chop bearish, and now maybe we will continue lower, which happens, which literally happened here, yeah? But if you didn't say that this was your low and you had it at this low to this high, what you're going to be thinking is, oh yeah, price is bullish, we're going to go to the moon. So you're going to be looking for buys here, buys everywhere, trying to look for buys only, yeah? But if you already know that, okay, the order flow range is from here to here, right? And if we break it bearish, now you're going to be like, you already know now we're bearish, and you're not going to be predicting that, okay, we're going to do this, yeah? You already know we're bearish, so now you're going to be looking for like the sells more often, okay? So let me show you another example. Oh yeah, just right here. Again, 4 hour bearish order flow ranges, because this is a proper range. We have this low, right? You don't classify this candle, you classify the next ones. 1, 2, 3 candles. Fourth one breaks, I don't classify the fourth one. You have at least 2 candles in the range. One of them is bullish, so that becomes when you're high, my low. When you're high, my low, yeah? None of these are 4 hour ranges. They're going to be like 15-minute ranges, yeah? To continue selling. And then we shift bullish, and then we look for buys as a pullback trade or something, yeah? As a little pullback phase. But then look what happens actually. It goes and breaks this high, yeah? But again, how did it break the high? What flipped and broke the range? It wasn't this low that broke it. It was this low just made it back up to here, then we pull back, break, pull back, and here, yeah? So this is really what flipped and broke the range, right? This to this, yeah? So this is your low that should be protected. Pull back, it goes higher, but why does it not break this high? Ends up breaking the low instead, yeah? So now you already know we're bearish. Now you already have the 4 hour chalk bearish, right? Do you see how it melts off afterwards? Yeah, it doesn't care about this low. Yeah. So if you had it as like this low to this high, you're gonna think this is gonna happen. Yeah. So is this opening your eyes? Is it making sense for you? Yeah. I don't know people. I know people don't teach this stuff, like, or talk about it much, but you get me, yeah. It's exactly the same for 50 minutes. Exactly the same story, same situation.
I'll ask a question, Cash.
Yeah, no worries.
So you wouldn't consider those like I get what you're saying with it all, but like, what about inducement?
Mm-hmm.
Like, do you consider that as inducement, or you just those levels need to hold?
Which ones? I mean,
like I get what you're saying with the ranges that broke structure, but
Mhm.
like if it comes back and takes that, I get how you're saying it's a chock as well. I'm thinking like
yeah.
you would never consider that as inducement and just needs inducement for the move
For lower
up.
POIs.
Yeah,
Oh, right. I
you
see what you're saying. Yeah, but do you know what's the beauty?
Yeah.
That's the beauty about what's in the plan. The plan says, regardless, like if you're in a 4-hour zone, for example, let's say you're thinking this is inducement for this, for example, right? Then
Yeah.
what's the plan? The plan says you need to have at least a 5-minute or 15-minute chock. So that's the beauty about
beautiful.
it. You see, the difference is that whatever people are doing is refining to 1M here, 1M, 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 and then 5-second chock, 5-second chock, 5-second, 5-second. And you're taking all these losses, yeah? But when you're taking proper cleaner chocks bullish, and as you can see, nothing happened here, just melt off, yeah? But if you're proper seeing, you know, that order flow shifting bullish, then yeah, that becomes a pullback phase of that 4-hour. You see? Yeah?
Yep.
Continuation.
Yep.
Yeah. So a little pullback and then continue. Yeah? Like impulse correction. So that's the beauty about it, you know, like we're not predicting all that stuff anymore. Like we used to, you know, everyone used to do is like taking the most aggressive chops, most aggressive entries everywhere and anywhere. Yeah. But like that's not the real way, honestly, for consistency, for longevity, to manage big accounts. Because what I love about the strategy and the plan that I have is that I can use the same plan on any account size. Doesn't matter if it's £100 account or like a million. You can use the same strategy on everything, and that's the difference between some strategies is that like some of them you can only use it on your little personal accounts. Yeah, you can literally only use on like £100 account or something because you know you're going to take about 10 losses before that win, and that's a really bad thing.
I think that's a place where I used to get caught a lot, thinking that like those lows were inducement.
Yeah,
and exactly how you said, like yeah, pitting out 1 minute and like 5-minute POIs, thinking
too much predicting.
That they would just true.
It's too much predicting future. You know, like you're literally fully predicting. You know exactly pinpoint accuracy that you know exactly is gonna go from some 1-minute POI to the moon. Yeah. But like, it's so much less probable. Like I've been there, done that. You know, anything that you know, all the strategies, all the refinements, everything. I've been there, done that. Like, so I went in a circle and I was like, you know, I've been through all the shit, and I came back. I was thinking, you know what, I need to make it as more simple as possible, more high probable as possible, even if that means less trades in a week. But who cares? Because less trades still. Like it's funny because I'm more patient to wait for the best setups, right? And taking that one good trade instead of, and then I pass faster too. So it's so funny. Like if there's a challenge or anything, all right, it's funny because I'll wait more patiently for it to come into here, for example, and take that good trade, all right, the high probable trade, and then pass faster than anyone else who is like trying to take 10, 20 trades a day, trying to take all these losses up and down, trying to take every move, and taking 10 hits every time, risking so small, and not getting anywhere. Yeah, like taking about 2 weeks to pass a challenge, right? But like, yeah, it's funny because like, you know, I used to like you can pass a challenge right in one trade or one day or whatever. Sometimes, you know, people say like it's a fluke or something, yeah. But when you consistently do it, it's no longer a fluke. You know what I'm saying? Does that make sense?
Yeah, copy that, mate. Another question I just had real quick. Like, is this for the 4 hour and the 15, or would you consider just the 4 hour and the 15? So lower time frames is just a different ball game.
Ball game for what?
Like as in if you saw that on the 15, you may say if you saw that on like the 1 minute, you may say like that may be inducement.
Oh yeah, but let's say, oh yeah, so if you're thinking this is like a 1 minute chalk back to bearish to come into here, yeah, like if this is for example, let's say this is your bullish 50-minute or 5-minute range, right? And it comes back into here, then yeah, it needs a 15-second chalk.
Yeah, okay,
you always need something in your favor, yeah? Don't randomly put a limit order here. Like always have things in your favor. Always have order flow, whatever time frames. At least have a couple of things in your favor. Always. That's what leads to high probable trades. You know, trying to catch this falling knife.
I've seen it just a couple times. Like say we're looking at a 1 minute chart for entry wise, and I know you'll go over entries and all that later on. Just seen that's been inducement before, but like as your strategy says, we don't count that as inducement on the 4 hour and the 15.
No, like it's just you know, like you'll always need extra confirmation after that anyways, right? You'll always need that extra 5 minute, 15-minute chop, depending on where it's in. Then that will give you a new POI. Yeah. And then we take it off there. You get me?
Awesome, man. So, awesome, mate. Cheers for that.
Yeah, no worries. So I'm just gonna show you this one trade because this one was like the most textbook, like literally highest probable trade you can ever imagine. Like if this is the one you see, trust me, like full like at 1% risk on these trades is what I take. It's amazing setup because the fact that it's pro trend everything, as in like 4 hour is bearish already, the order flow, right? It comes all the way back up to the premium as well. That's an extra confluence. It doesn't have to be in the premium of the 4 hour, but if it does, that's even better. And then you come into a 4 hour supply zone, which is a clean buy to sell bullish engulfing candle right here, amazing in the premium, literally very much the extreme of the range. It comes perfectly into there, right? What happens next? Yeah, all you need is a 5 minute chop, and then in that scenario, because you're in the 4 hour zone. Yeah, but if it gives a 15, then cool. Like that's even better. Like look, it gives a 15, so that's even better. Because it's a high time frame. High time frame is better always. It's king. It holds more weight. I'd rather take high time frame chops than any single refine it down, like find like the tiny 1 minute POI and trying to take 5 seconds here, trying to take 5 seconds in here, and all that stuff. Yeah. So that's what I used to do. Like I said, I've been through that, done that, and I never got funded trying to do it too aggressively. Yeah. And this is just like the perfect place, perfect kind of plan for me I've seen, and not just for me, for like hundreds of people that I've taught, that there's extremes, you know, on two sides, and there's a middle point in terms of strategies. There's this type of strategy, like more like, you know, retail style, where there's like high strike rate, but the risk to reward is very low, like 2R and stuff. But then on this side, the other extreme, you got a very low strike rate, right, but very high risk to reward. Yeah. And I don't want to be on either side of this spectrum, right? Being in the middle place, being in the middle point is such a perfect place to be in, where you can have a good enough risk to reward, a good enough strike rate, and then everyone's happy. Like it's chilling, honestly. I'm not a swing trader, and I'm not like a scalper kind of thing, but just being in the middle is just the best place to be in my opinion, from all the like experience I've got from trading. So 5 minutes is enough, right? And this is actually a 15-minute wick right here, the extreme. So what I'm going to do is always map up my premium discount always, because I need it to come into premium. 4 hour is just optional, you know, that's extra confluence. But on a 15, because this is like my lower time frame order flow range, I have to make sure that extra confluence is that it's in the premium. Yeah, you will never ever see me selling from here. It's just low probable. I will never ever take like them 1 minute continuations from here. No, I will always wait for the pullback into premium. All right, so I'm just going to show you guys on the 5 minute, because the 1 minute does not let me go this far back. So like, I'll just show you here. Right, but the same rule applies. Is that, you know, wait for liquidity inducement before the POI. So I'm going to just like briefly talk about that now. Is that, you know, I want to see inducement before the POI, right? That could mean equal highs before the POI, such as like support and resistance level, or it could mean like a structural liquidity, which is a buy to sell that takes the low. Yeah, I think you can switch to 1 minute. No, you can't. I've tried it before. I've tried it before, so like I know it doesn't work. But yeah, I want to see like structural liquidity instead. It's like a buy to sell that takes its own low, like a substructure thing. It's just, you know, it's nothing like this. It's more like if you had like, you know, a POI resting over here, for example, and then this low right here is your structural liquidity sell to buy that takes its high. Yeah. So this low would be my structural liquidity for this POI here. Yeah. Sweep it, come into the POI that I want to buy from, take my chop, and then take the entry from there. All right. And the thing is about inducement is that it only needs to happen up here one time. Yeah, sweep it one time. Like you don't need it on the 15M and then the 1M and then the 15 seconds. No, like you only need it one time, right? So I need it here, or if there's nothing here, as you can see, clear, just one push down. There's no liquidity point to get swept before the real move. So it just left like all this imbalance right here. Right, I don't care about imbalances and all that stuff, right? I want to see liquidity before the POI, but there's nothing. So just imagine I'm on the 1 minute time frame right now, right? Because on the 1 minute time frame, I need to see the 1 minute generate liquidity, right? At the moment, there's nothing happening. Like it's just making these like higher highs, higher lows, right? There's nothing. This is not enticing you to sell, yeah? When price is bullish, that's not telling you to sell, is it? When it goes back to bearish, right? Then you're going to be like interested. You can be like, okay, maybe let's sell it, yeah? But like here, we're just bullish right now. What happens next? Oh, now we go back to bearish. Yeah. So now you see that 1 minute chalk here. Yeah. But take the high, take the low, 1 minute chalk, right? But where does it happen from? From a place with no inducement, right? Not even in the POI itself, nothing. Yeah. So for me, because there was no structural liquidity to be taken on the left, this high becomes my structural liquidity to get swept. So I'm just waiting for it to sweep. I'll have a layer here. I'll wait for it, right? And now it's even generating equal highs as well. Perfect. Just more buy side liquidity to get swept before the real move. So I'm just waiting for it all to get swept, all right? So now we sweep the highs, yeah? Perfect. That's like the first major thing to do. Sweep these highs. Now we mitigated into the POI, that 15-minute wick that we saw, right? And now I'm just looking for a chalk now, innit? Like literally change of order flow on the 1 minute, change the character, and that's it, right? This is the low to get taken because this is your sell to buy that took this high. This is the cause of that break. Remember what I said, even on that rule applies even to here. What flipped and broke the range? It was this sell to buy that broke the high, yeah? So you don't have to wait for this low. It's this low, okay? And that's it, perfect. Now you've literally got everything that you ever need, yeah? But what you used to do before is like trying to sell it here, early, here, sell it. Because you're thinking, I'm going to miss the trade, I'm going to miss it, you know, getting FOMO, getting in 5 seconds here, and then all getting clapped, yeah? But if you wait patiently for all this to happen, there's no claps, there's no losses, literally. Even if this takes five hours, it took like 5 hours or 3 hours even, right? And literally you wait for that, that's fine. Because if this one plays out, which it did, like you can't complain. This one went to like 100 and something R, but you know, you can at least catch 10 R minimum, right? And then leave 20% runner to the final TP. That's perfect. So you've seen everything you want to see. Now as soon as it mitigates and you can get a good enough stop loss size, I'll just take the trade. Yeah. So simply on the 1 minute time frame, you can execute this trade, right? Like people are always trying to take seconds off of everywhere, but if it's not needed, it's not needed. Yeah. Because you see how like the 1 minute is still aligned bearish in your favor, right? It's still bearish. So when it comes back, I can easily take it. Like I don't need extra confirmation. It's when it switches from bearish to then bullish. So you see the order flow shift now, yeah? From this bearish flow to bullish flow. So now if price comes back into here, I no longer have 1 minute in my favor, yeah? Because 1 minute could now continue bullish flow, right? At least give me an extra confirmation, which is like on the 15 seconds, right? At least to then take the sell, yeah? But here, the 1 minute is still bearish. So it comes in, just take it. Like literally as soon as you see a good enough stop loss, like I'll take it. So I'm not going to take it down here because obviously it's like 2.1 pips and stuff. I'm not going to be taking it. And the POI, even it's this bullish batch, so I kind of refine it down, even it's this one. I don't put limit orders. I'm just going to hit market execute. As soon as it pushes in, right, I'm clicking sell now, right? As soon as it pushes in, because I know that it's better to hit sell when it's coming towards you and not when it's leaving, right? Because as soon as it starts leaving like this, right, now look at stop loss. Yeah, you're going to get filled here. But you'd rather get filled when it's pushing up because it could fill you in higher, right? Even 1.5, right? Depending on how, like executing flawlessly, like I said here, execute flawlessly, right? As soon as you see on trading view and MT4, like I'm clicking sell, like, so, you know, if you needed to or wanted to use 15 seconds, then yeah, you can, because like now you're in a refined POI, you can use 15 seconds here and take the trade on the 15 second chart, for example, with a stop loss above the 15-second high. You can do that, yeah? But honestly, like, if you can get in under 1 minute with a better stop loss placement, which is higher up, and your stop loss is higher up too, right? Your entry placement, stop loss placement is like better. Yeah, it's so much better. So it can help you to go to break even faster too. Yeah, like as in you're more protected and you break even. But if you're like entry down here or something and you go break even, like don't you think you could easily like do that? Right? More chance you could, right? So and then when would I go break even? It's when it breaks this low, right? This is your real like 1 minute boss, 1 minute break structure. It's here, yeah. Not this chop here, not this little one, because price could break here like it did, pull back, and then go again, right? I don't want to get my entry mitigated, for example, and then hit break even and then go to TP. Yeah, I'd be fuming. It's happened to me like once or twice before, and I learned a lot of lessons from doing all that stuff. So that's the trade. Literally, like I'm gonna go for my 10-hour trades and pro 4-hour order flow. When I'm pro 4-hour order flow, I'll take off 80% 10-hour instead of the whole position, right? Because it has potential. That's the only difference. If a trade doesn't have that much potential, I'm just gonna close it at 10, especially like when I'm counter trend the 4-hour order flow, yeah. But when it has potential to really run these weak lows, run all of this sell-side liquidity, these mitigations, right? And it's pro 4-hour order flow, yeah. Then I'll take off only 80% at 10-hour and leave 20% to go to the final TP, right? Because I'm also happy with 20% to go break even. But are you happy with 100% to go break even? Not me. I don't recommend that to anyone, right? So imagine you're seeing like $10,000 on a trade and it all goes to break even and you took nothing. Like I'm sure you'd be crying. And then that's the final TP would be there, like 72-hour trade. Right, for doing nothing. Like after you took off that TP one, you don't do anything now. You just leave it. Final TP 0, and then that's it. This took you half a day.
Cash, I have a question, bro.
Yeah, sure.
I want to talk about especially counter trend trades with to take full risk of 10R, which makes completely sense. When we now talk about the stop loss size, maybe you got in with 1.2 or 1 pip, and I got it with 2. Would you recommend to say, okay, man, close it at, I don't know, 6R, 8R, depends on your stop loss size, or what would be your recommendation?
I always try and push it to 10. I always try and do that, even on like the 2 pip stop loss sizes. If I'm pro 4-hour order flow, I always still try and do it to 10. But when you're counter order flow, like it is harder to get to 10 because that means you need 20 pips, like you need at least 20 points over target. And then at that point, we do need to like practice on how to get, a bit tighter stop losses, like 1.5, at least something like that. Yeah. Definitely takes practice, takes time, because obviously it's not easy to execute like that straight away, but it does take time. And I don't recommend it like to close it early. Like I don't recommend to like just go for like 6R or something. I don't recommend that. So like when I trade, let's just say on US30, where's the trade at? What was that? Let's see. I'll show you some example. So where was this? 4-hour was bullish, and then there was buys in here. Yeah, but even if you counter trend or pro trend, when it really has potential to go, like, then honestly, like even 2 pips is it still works, even to 10 hours. Like there's quite a lot of trades. There's some trades in here. They sell from here. We're pro 4-hour. We're all for bullish on the 4-hour. Yeah, there's a sell in here, and I think here as well. They both run down like how many pips? Yeah, 34, right, and 60. So like, if you have a 2 pips stop loss, you need 20 pips, yeah, like 20 points, yeah. So it's still possible, and the thing is, like, I want to teach you or help you to like get into the moves that are like have potential to run more, like the bigger moves, not them little scalpy like 5-hour trades and stuff. Because with the strategy, like it's just, yeah, it's kind of like you're doing yourself a disservice if you're only going for 5-hour trades when
I know.
like
No, I just was, I just wanted to ask because I mean I knew already, but I was, maybe you say yeah, man, and close it at 8, for example.
No, I wouldn't have a fixed number like that on them. Like I do recommend like 10-hour trades because you should always be in moves that do give you 10 hours at least. That's the thing about this whole thing is like it's not about stop loss sizes exactly. It's more about like you need to be in the positioning, in the good positioning, in a good pricing, in the good POIs, high time frame stuff. That's what leads to the bigger moves, and that's what you need to catch, right? The bigger moves. Not just like little tiny moves like this, for example. It's the ones that give you bigger risk rewards. So like even with the 2-pip stop loss, that's still 14 R. Even with that 2-pip stop loss, that's still 12, 13 R. Like, so you just need 10 to try and manage to get 10 each time. That's the thing that you need to like lead up towards, like just lead up towards, the 1% risk, 10-hour trades. Literally, this is like when I started to do this, it just changed everything. Honestly, like being in the trades that give you at least 10 hour full volume, by the way, like no partials, like having the confidence to just risk 1% and take full volume all the way to 10 after you got break even, no more partials. So if you can do this consistently, when people like they dreaming about like 100-hour trades and 50, 60-hour trades, it's crazy. It's funny because if you can't even consistently do 5, 10 hours, who are you to dream about like hundreds? You know what I'm saying? Like if you can't even be in the moves that give you them like 10 hours, how can you even think about 100? So that's what I'm trying to help you guys to like kind of open your eyes to things. Less is more, and being the high probable trades with less losses. There's so many trades on US30, just like very less losses compared to like what I used to do on EU or whatever, like before the other strategy with all this 5 seconds and stuff. But yeah, like, does that make sense? Everything's all good?
Yeah, Cash. Hey, what's up?
Yo, what's up?
Just have a quick question. If you can go to US 30 4-hour.
Oh yeah.
First of all, salam alaikum.
Salam alaikum.
Do
Right.
you see the range up, the one where it keeps like breaking up and breaking
This
down?
one?
No, up.
Oh, this.
Yeah. Can you just like take us through it? Like just explain.
Easy, very easy. Like high and low and high, yeah? This is simple, yeah? Then how did we break this low, right? It wasn't just one clean push down, right? It was this flip, and this is what broke, yeah? This is the high that should have maintained, right? To go lower. Why did it not do that, yeah? This one as well, like, can you see how it's like kind of like mitigations to mitigations? So it's like, why did this high get broken bullish, right? So this is what, there's a question, is what flipped and broke the range, right? It is this high. This is the high that broke this low, yeah? This is the supply that is irresponsible, that is in power of breaking this low, right? So when we broke the high bullish, now I'm bullish, right? So now I'll do my premium discount from here to here, right? Until it shows me otherwise, right? And doing it this way in the long run, trust me, it's so much better. It doesn't matter if it fails 1 time, 2 times, it doesn't matter. It doesn't matter if it works or not work sometimes, I don't care about sometimes, I care about like a lot of times, like most of the time, the probabilities of things working out. So when it went bullish like this, it pulled back in here. This is where I took a buy from, right? And then there's a couple buys I think here too. Oh yeah, the one that I just showed you earlier. There's a couple buys in here that both ran to like 20 yards, and the one I took was from this absolute low here. That passed me in my phase 2 MFF challenge. I just took it here to here, right?
That was from like 1 hour demand level, right? Or like how did you map? How did you come to the conclusion that the demand level is like there at that point? Was it like because of the 1 hour? Because I looked at this and I saw 1 hour POI there, and I was like,
yeah, but there's no need like, because it doesn't matter if you mark it up like this, right, or like this. I just did it whatever because the whole wick is the POI, but I'm not gonna make my chart look messy or dirty to have it like so big, if the price is down here, then why don't just drag it down to here then, just to make it cleaner. I mean, I just want to see what I'm doing right now. So this is what I need to look for. I'll go to the 15-minute or 5-minute, wait for the order flow to shift in my direction here, bullish right there, pulls back in, right, gives me the confirmation entry, and then take the trade. You understand?
I see.
Yeah, but you don't need no like 1 hour and like 6 hour and one daily. You don't need it, right?
Yeah,
it's just yeah, you just don't need, like, it's just things. There's so many things you don't need on charts, like that is irrelevant. So but to be honest, yeah, like hopefully this all makes sense. This is the major part of the analysis. So like anyone got any last questions?
Hey man, can I ask you something?
Oh, it's too out of time. Just take turns.
So
Yeah, go on, man.
Wouldn't this be the high that broke?
Oh, this one.
Yeah, this. Yeah.
No, I never use this. Like, when there's one wick and like one candle wick up and down at the same time, I don't use that ever for like a new range. So you see how there's one here too. There's one here, up and like down and up at the same time. Yeah, like I never use this for like a new truck or range, right? It's still going to be here to here.
But what about all the bullish candles before the wick down?
No, I don't care. Like, this price action is horrible. Like, it does not, it means indecision.
Not convincing enough.
It's indecisive, right? That's what it means. It's indecisive. So when price action is indecisive, right, it means that like the BFIs or whatever, they don't know whether they want to go up or down. It's like they don't know. So if the BFIs are indecisive, then who am I to know? who am I to know where it's gonna go? Do you understand?
All right, so you look for more of the convincing move.
Convincing, clean, this is clean. Yeah. But this up, down at the same time, no, I'm not using that. How do you know where it broke bullish? Like, it's just weird, like it's not clean. This to this, broke the low, broke the high, that's clean. Right? So
all right, thanks.
No worries. What was the next question?
Yeah, I want to ask you about the premium and the discount range on 4 hours. You said that you are not using it as a rule, a mandatory rule. So you're just...
It's not mandatory.
It's just an extra confluence.
It's an extra confluence, extra confluence. Like see how you have your 4 hour supply now.
Yeah, exactly.
So this is like extra confluence.
But you would buy from this, sell from this, right?
Yeah. So if this is like another 4 hour zone, like it probably clean out a different time frame. Like if I have to use another one, I have to use it just because nothing there. You have like wicks.
Yeah, wicks. So you don't use wicks as higher time frame zones.
No, you do. You do as all the buy to sell wicks if it's a clean flip zone, which it is. Yeah, it is. So yeah, I would use that. Yeah, I'll wait to see what happens in both of these on the 5 minute time frame.
Right.
Yeah, okay, 5 minute chocks at least. Yeah. Any more? 1 second. Oh, what's this? Oh. So let's see. Big brain boom moment, source, paradigm shift. Yes, still have to familiarize myself with some of the concepts, but it's clear and damn amazing. Yeah, sick. You just changed everything I thought about. I knew about structure. Yeah, we were in a simulation in the matrix. Extra confirmation and execute. Yeah, wanted to confirm by entries due to enter the 1 minute needs to chock in your favor first, then the seconds. Yeah, 100%. Like if you got a 50-minute chock, then I'll need a 1 minute chock in a 50-minute POI first. I no longer refine the 50-minute POI down to like the 1 minute and then use 5 seconds. I don't do that anymore.
Can I have a question?
Yeah, sure.
So because you said, can you see this 1, 2, 3 consecutive H4 order flow on the left? Yeah. And you said that you caught some sales on this. So how do you close those?
Literally just simply 15-minute chops from the highs, like what day
Okay.
is that?
Okay, so you don't. So if you don't see the on the left of this any
any 4-hour zones,
zones, then you're probably waiting for some chops and try to sell.
Yeah, this one.
Even if the order flow is bullish.
But the 4-hour can be bullish, but like you see how we have broken that 4-hour here, and now price is up here. So if I get a nice 50-minute chop to sell, which it does, take the high, take the low, right? You can sell it from here.
Okay.
Yeah. Again, same thing happened here. We broke it bullish, right? How can I sell it? We're still bullish, but like I said, what flipped and broke this high? It was this low, not this low. So this is the low to get broken, right? So this is your low and high. We break here, we pull back in, we get a clean 1-minute chop here, and it was the cleanest entry. Very, very simple textbook.
Why not the upper one? Like you mark the
this one.
No, on the left.
This.
No. The bearish candle on the left between those two bullish.
Oh, this one.
Yeah.
Yeah, no, this is not the 15-minute chop, because the 15-minute and 4-hour chops, the actual range itself, right, has to look like what I explained to you, what is an order flow range, right? So it still has to look the same thing. This one is not, it's the same, it's like inside bar thing that I showed you, the one I said like I've never used as a truck, the inside bars.
Okay.
It has to be this low. This is what push down, push up, clean, order, like
okay.
clean.
So
order
you need at least 2 candles. Yeah.
It's not at least 2 candles. It's just even one is enough. But this candle wick here has to go higher, then go lower like this, and then break high. You understand?
Okay, so this gap, yeah?
Yeah, the gap, man, is so important. Like you see how this one has a gap. Yeah. And all the ones that every truck I'm taking has a gap, even that one on the left. Look at this one. You see that gap? Push down, push up, and then broke the low. You see the difference?
Yeah.
And this is how I take every single one.
Okay.
Hey, Cash, can I ask a question, please?
No worries, no worries.
Can we go back to that price action you were just looking at?
Oh, yeah.
For a second, mate. The thing that I was talking about inducement before, when you were talking about that the ranges should hold.
Yeah.
So I'm getting a bit confused within, even if you go back to that 15-minute chock you were just looking at before.
This one.
So that's perfect. Oh. Both of them, man. Any of them. So the range that actually, and the high that broke that range to chock was that one, right? Correct?
Yeah, this one. Yeah.
So that's used as an inducement. I thought I was just get confused because you were saying that it should kind of hold. That's where I get a bit like weirded out about inducement.
Oh yeah. So the thing is,
are you just saying that's on the 4-hour that should hold?
No, it's like literally both. But there's only one rule that I have with this type of price action, as in the first 15-minute chock that occurs, right? In terms of, you know how there's a 4-hour continuation and there's a 4-hour pullback phase, yeah? So the first 15-minute chock that occurs in either these two phases, right, to push the price higher or lower, right, can still be used as an entry POI, right? So even if we, for example, like here, we have price come down and we get the pullback, let's say 50-minute has chopped bullish here. Let's say 50-minute chopped bullish and we have left with this POI here, but the order flow is continuing to go bullish, yeah? But then it comes back down bearish to come into that POI here, right? But because this is the first 50-minute chop that occurs, right, and to cause that pullback phase, same with that continuation phase, I will still use this POI for that 1-minute chock entry.
So just always be cautious of the extremes, are you saying?
Yeah, the extremes, the ones that cause the first chock, as in this one, right? This is a chock, isn't it? Yeah?
Yep.
Right? This is what caused that first chock, yeah? So it doesn't matter if it broke that order flow bullish to get up to here. As long as it gives you that clean 1-minute chock with that liquidation of these highs, right? I'll take it from here.
Yep. Okay, cool.
But only because it's the first one. That's the most important thing. But if it was like the second, third chop, like the one that happens like later on here, and then let's say it broke here, then it broke bullish to come back into here. No, I don't want to take them entries. Yeah, because this is not the first chop, right? It's this one. So this is from experience and from like testing and everything, is that these ones still hold, like the extremes of that first chop. Okay.
Yeah, it makes perfect sense. Thanks, mate.
Yeah. So same, like there's another example like here. So 4 hour is still bullish, 4 hour bullish, right? This was a little pullback trade. Yeah. And then it realigns here back to bullish. Yeah. So obviously this one comes in straight away, we can take the trade, fine. But let's say it doesn't come back in straight away. Let's say it just continues a little bit more, right? Making bullish order flow ranges, but it comes back in, right, to that range here. That first 50-minute bullish chop. Yeah. I will still take a 1 minute chop here for the entry and then use that as inducement.
Yep, beautiful.
Yeah, that's literally the only one rule that you need to write down. This comes into like the entries Zoom that I'm gonna do another time, but literally like, yeah, that's still the only valid thing I'll do, and that is literally all the source that you need. Everything about it, by the way, everything that I'm gonna tell you during this whole thing and during the whole mentorship and everything is literally all you ever need to know. Like, there's nothing else. There's no other concepts and no other kind of indicators, no other kind of noise that you ever need to know. Like, literally, it's all this, to keep it as simple as possible. So let's see. Any other questions?
Cash.
Yo.
Normally, the way I've always traded is from a 4 hour POI, I've always gone for like 15-minute chocks, all right? That's just because that's what I was taught.
Yeah.
I heard you say about 5 minute. I've never really looked at 5 minute time frame. But what would you say you use more often than not, 5 minute chock or 15? I know you said the higher time frame is more powerful.
Yeah.
Personally, from looking at 5 minute recently, it's pretty clean. I do quite like it.
Yeah. I know, yeah. Well, that's the thing, like 15-minute, like I said, is always needed when I have no zones, like here. There's no POI.
Yeah.
Right? For me to ever sell this, I always need that 15-minute chop. Yeah.
Yeah.
But when I come into that 4 hour POI, like here it does, this massive candle comes into it. I use a 5 minute here.
Yeah. So yeah.
5 minute. Again here, 5 minute. You see?
Yeah.
That's it.
No worries.
Let's see. Do you care if the inducement is swept in one move or not? All right, you're talking about like if the inducement either sweeps like this or it sweeps like this? Is that what you mean? E26MI.
Yeah, man, that's exactly what I mean. Yeah, if it retraces, respects supply in this case, and then continues back down.
So this, like, I don't know if you're talking about like a 1 minute or something. Or
yeah, you had. I guess where you showed us that entry before that big move.
Yeah. So let's say, for example, wait, I don't know which move did I show you? I mean,
the actual trade, the 60R or something.
60R.
The one you broke down before.
It was a 5 minute one, mate. And
the 5 minute, yeah.
Yeah, you couldn't get to the 1 minute chart for it.
Exactly. Oh, on EU. Okay, say that then.
yeah, this one.
Oh, okay, say that. Okay, this one. Yeah.
Yeah, we can see that price traded higher after it swept the
yeah. Oh, yeah. No, that's fine. Yeah, that's fine.
I mean, this is the way I was taught, and
yeah, that's fine.
Yeah,
that's fine.
You get what I mean, right?
It does. Yeah, it does. It continues a bit more instead of like coming back straight away. Yeah,
exactly.
That's fine though. That's fine. Like, because you just need to see that series of events: liquidation, mitigation of the POI, 1 minute chop, bearish, entry, bank. You see?
Okay, I just wanted to make sure if it's a thing you are looking at or not.
Yeah, that's fine. No worries. What's the order of alignment in this trade? 4 hour POI, 15-minute chop, or 5 minutes? Okay. Yeah, 5 minutes. Okay. 1 minute chop and 15 seconds for entry. Yeah, like if the 1 minute chop happens like this, still aligned bearish, right? You can just enter this trade. There's no problems. Like stop loss above the highs. If you can't get in or something, like stop loss too big, then yeah, I'll use 15 seconds, in that POI to confirm the trade and then get in on the 15 seconds. But like, you don't always need seconds in that scenario.
So since we're in the 4-hour POI, you're just looking for a 5-minute chalk and then a 1-minute chalk, and then you can hit it right off that.
1 minute,
15.
yeah, inducement first, and then 1 minute chalk, and then get in. But because this is it's a 5-minute range, right? On the 5-minute ranges, this one is actually a 15-minute range, so it's a bit of a different story. But sometimes there's 5-minute ranges and they're quite small and compact. You don't get like this 15-minute price action. Yeah.
Mm-hmm.
Sometimes the 5 minutes is pretty small and compact. So then what I do, I don't need a 1 minute chop to happen again, because it's already tiny. Like there's no space for the 1 minute to line bullish or anything. So when I get like 1 minute POI, for example, I can use 15-second chocks straight away.
Okay.
Yeah, I don't need to see all of this extra stuff on the 5-minute chocks, but on the 15-minute, I need to see all of this to happen. Yeah.
You just need the 15-second inducement before the 1 minute POI and the 4-minute, 5-minute
on the
range.
5-minute one, no, not even sometimes, not even. Like if it gives it, it gives it. If it doesn't, then literally there's only one other place it's going to come to the extreme and give you the 15-second chock. I'll take it. Like it happened the other day, on Thursday. It literally happened on Thursday. Like, let's see, what was Thursday? It was the 9th. Yeah, this trade. I was waiting for too much to happen here. That's why I didn't execute it, but I wish I did. Because I didn't need to see anything more. Because on this one, we was in a 4-hour zone right here. And then we come into it, we already swept all this liquidity before this, all like 5-minute, 15-minute chop. All these low swept comes into it and it gives you a 5-minute chop right here. Yeah, takes the low, takes the high, as you can see. And then it comes back into the extreme, like literally. That's like the last place it's gonna come to. Like, I'm not gonna wait for another 1-minute chop to happen over here or something. I'm not gonna wait for that. Like, inside of this extreme, 15 seconds is all you need. And can you also see how the 1 minute still aligned bullish as well? Sometimes this happens. Sometimes the 1 minute and 5 minute are the same sort of like leg, yeah. And when it's still bullish, like this aligned, right? Then I'm happy to just take a quick 15-second chop.
Even if 1 minute internal bull has bearish.
It doesn't matter about it doesn't matter about internal, like because the actual leg itself is bullish, right? So to get a double confirmation entry, I'll use a 15 seconds because I can't just enter on this trade because stop loss would be like too big, 2.6 pips. So I'm not going to enter that trade. Yeah. So 15-second chop to confirm it, and look how clean that was. The cleanest chop. Take the low, take the high, bang. You get me?
Beauty, thanks, man.
Yeah, no worries. This is like 21-hour trade. So beautiful. Like, just need to get to like 10. And then you passed any challenge in the world. So,
Cash, I have a question.
Yeah, no worries.
Just want to confirm how you do continuation trades with 15-minute order flow. 15-minute continuation of ranges. Do you know what I mean?
Yeah, it's just exactly the same procedure. Like, pull back into the premium. Let's say we're not in the 4-hour zone. Yeah. Let's say we're just following this 15-minute bearish, for example. Yeah.
Okay.
This is a break, right? Okay, this is not a good example because this is a good example. Yeah, this one. So 15-minute breaks bearish. This is my range. Yeah. So simply pull back into the premium, into the supply, right? There's no inducement before that 15-minute POI, is it? Right. So on the 1 minute time frame here, I need to see it give me inducement, meaning like on the 1 minute, give me equal highs, sweep it, chalk, bearish entry, yeah? Or you can give me a fake chalk, which is give me a 1 minute chalk, but then sweep that 1 minute chalk, then give me a second 1 minute chalk to take, right? So it has to give me that here. And that's it. Like what else you need? You know what I mean?
Yeah, like so if the price goes lower and this is our new range, right?
Nah, it's actually from this high.
Oh, okay, yeah.
Yeah, that's why this is not a good example because it actually sweeps it, right? And I wouldn't take this trade. right? Because then I'm bullish, right? So I wouldn't be taking any sort of sells, and because this is not the first chop that happened of the 4 hour, right? The first chop of the 4 hour happened all the way up there, up here. Okay, this is the first chop that caused that 4 hour break bearish, like the extreme points. Yeah, that's the first area. So that's why an entry inside of here would have been possible, right? Because it's the first chop that happens, right? But down here, it's chopped about 10, 20 times after that. So I can't predict that. Yeah. Obviously, this one is also in the 4 hour zone, but yeah, like even if it wasn't, then I still wouldn't be able to take that one that I just showed, where it breaks this high and then melts. I wouldn't ever take that trade. Never.
Okay. And after drawing out your 15-minute chalks, you said you don't refine it to 1 minute anymore?
No,
right?
no, I don't.
Okay. So just premium discount?
Yeah, premium discount, markup POI, which is this.
Oh, so still 15-minute POI, yeah?
Yeah, 15-minute POI, yeah.
Okay. All right.
And then just wait for it to come in, and that's it.
Cool,
yeah.
Thanks.
No worries. What if, for example, we never make a lower low that is going to be used as inducement, but instead we reach the POI with 5-minute bullish order flow? That's, you have to unmute yourself for that one, if you can. S Connie. Do you always take trades on the 1.5 pip stop loss? No, like it can, like I've taken trades on 2 pip stop loss, even like 1.8 still can give you 10 off, like, but obviously try and get it smaller, like, you know, under 1.5s is ideally what I want. But if it has to be higher, it has to be higher. Like don't try and force it too much, because when you force it and you don't cover the highs and you just have a stop loss like here, it can easily hit your stop loss and go TP with spreads and stuff as well, you know. So just be smart, work smart, not hard. Yeah, 20 points is usually the max. Used to get intense straight away. 50 yard with 5% volume running. That makes sense. 5-minute chalk. Need to learn the entry. It all makes sense. Can you walk us through the most recent US 30 trade? The entry. That's on the end of the markups, Logan. Like, yeah, definitely go through that, because this session is for the order flow ranges. I've already obviously gone through some entries already, but hopefully that helped. I'm gonna do it on another Zoom. We nearly been on this call for like 2 hours. That's all.
Okay.
Yo.
I have a question about 4H order flow.
Yeah, sure.
So right there, would that be considered a range?
Yeah, I've not marked it. All right. Wait. Oh yeah, I think I deleted it. Well, that is a range. Must have just wait, oh, because it's top. Okay, makes sense.
Perfect. That's it. Thanks.
That's a range, yeah. Because can you see how, you know, price comes up here, pushes down with a couple. We've got like one bearish candle at least, but there's at least 2 candles in this range. We have 1, 2, and 3. We have 3 candles in the range, right? Mm-hmm. That confirms to me that 4 order flow range. Okay, perfect. Simple, yeah. Let's see. When looking for 5-minute chalk entries in those 4-hour supplies, can they be in a discount too? They have to be always, yeah. Always in premium discount of your new range. The LOFR range is always premium discount. That's a must rule. Like high probable stuff. Like obviously think about it, like in any business, or the foundation of any business, like buy low, sell high, yeah? Like buy something cheap, sell it expensive to make a profit. So like we should do the same thing. Buy something lower, cheaper pricing, and then sell it higher. Our TPs should be higher to make profit. Order flow is more aggressive approach and structure, and it makes total sense as we're shifting our ranges fast with the movement of price. Thank you. You just changed the view of viewing the markets. Yeah, exactly. Like Orderflow is a real, like the real, like as the real price movement, isn't it? Like price is constantly moving. The market's ever changing. Like you can't just have one fixed high and low forever. Like it's not gonna always be that. Like it's kind of stupid and kind of unnecessary to just say like even on here, for example. Imagine me just saying like all of this stuff, all of this time here, I'm still saying that this is my high. Like that, like why? Like what's the difference or purpose that it's gonna make to me? That this is still my high, like and price is all the way down here or here. Like it makes no difference to me. It makes I don't see the point. There's no point for me to say that. So why am I gonna mark it? I'm not gonna mark it. Like I'm gonna say I'm following my ranges, keep following them until they fail. Keep following them, and that's what happens. Entry Zoom next week. Next week is going to be all about supply and demand, all about inducement, and yeah, that's next week's Zoom. You know, to just refine and go over all of that stuff first, and do entries like after. To be honest, POIs, yeah, it was on EU. Okay, we'll get deeper into these rules later date. Yeah, exactly. Like every day, really. Actually, like when you go through the chart markups and you go through all the end of the day, the forecasts, everything. Like it's literally all printed on charts on the analysis and stuff here. You can see. So about the zooms, because they will be deleted on Sunday, we are able to see, and we are seeing all today and entries next week. If someone is getting into the community on Monday next week, so they missed the order for Zoom. Yeah, like every Sunday we'll delete like the previous week's one, because what I want is to make sure like everyone is staying on the ball. Like obviously what's the point of like having it there forever? Because like it's kind of delaying your process. Like I want you to go through the session like during the week and I'll work faster. You know what I mean? Like don't waste your time. But yeah, obviously next what the new people that join, obviously like they have to go through obviously like the markups, all of this, the source that's in the chats, the Q&As and all that stuff. If you have any questions, and obviously exactly like what you've been through, but obviously this will be like repeated obviously on another Zoom. Like obviously I'm gonna go through it for new people on another Zoom. So like it's gonna be constantly like ingrained into your brain. So if there's any further questions or any further refinements, anything that you need, then yeah, we're gonna do it separately. I understand that you're teaching each topic separate, but could you provide us with a plan and checklist so we can backtest and trade during this upcoming week? So like the actual plan is like, again, like just getting laid out every single Zoom and every single day, actually, to be honest, with like all the questions and all the markups and everything. So to be honest, it's getting laid out like every single day, to be honest. The Zooms just go over like in depth of each concept, but like I won't just put like a PDF and stuff straight away, because as soon as you join, like everyone just thinks about getting into trade, getting into entries. But like, yeah, like Chevy Wolf just said, you need to learn step by step, hold your horses before you get burnt, because there's no point just straight away getting into entries when like you need to put in the work like I did. I made it easy for you guys, obviously, but the work I did was going through each concept for months of data, like literally to test and train your eyes and to see what works, what's not working, and to go and train your eyes and backtest everything. I'm telling you, like everything I said to you this call, everything that's in the markups, the forecast, the outlooks, the end of day markups, go and put it onto your own charts and train yourself on them. You know, like then week by week, you're gonna just improve that massively. You know what I'm saying? Question answer Zooms, yeah, exactly. Yeah, Q&A Zooms and everything. Progress checks as well, because obviously what I want is to make sure like you're all on the ball. Like I'm gonna put some steps onto here. 1 second. Chit chat. All right. So on announcements. So I'll put some steps here to follow because everyone should be, doing this. But even if you're already in a challenge, and let's say like you need to, because if this way of like viewing the markets is obviously a bit different to other ways that you used to trade, then obviously like why would you can't just straight away implement it into a new challenge. I mean into your old challenge. You can't just do that, Like you have to train yourself first on this, like make sure you're fully on it, like before you actually implement it into a challenge. Because you don't want to just like blow a challenge whilst you're in the process of like learning something new or something. It's just it's a bad thing to do, unless you're in origin challenge, even if you are still highly recommend. And then step 2 as well, I rewatch the Zoom call, make notes, backtest. Ask any questions if you're unsure, right? All of them backtest all the forecasts and end of day markups to train your eyes. Like you should be doing this so far, and obviously spending 30 minutes or so daily on psychology work, because 80% is literally psychological based. Honestly, it really is. Like, it's not even a joke. Like, people say it and they don't mean it, but honestly, it is not even a joke. Like, I had a big mindset shift, and then that's how I got profitable and consistent. Like, literally, technicals alone, it's not good enough. Honestly, like, it really is not. But yeah, anything, all the other stuff I'm gonna be putting on for steps to follow. But yeah, you should, definitely go through everything that I'm saying. If you listen to me, then I'm sure like you'll see massive progress. Let's see, anything else? So this week we should focus on Orderflow until next Zoom. Yeah, everything here. Go through all this stuff and let me know if you have any questions or anything that you're stuck on, anything in questions, and I'll get back to you straight away. Is there any other question before we end the call?
Yeah, one last one, Cash.
Yeah, sure.
On the US 30 right now, we are in a huge 4-hour demand.
Yeah.
And is it normal to just be looking on the 5-minute time frame for a shift in order flow to the bullish side?
Yeah, like what we're waiting for is prices down here, right? It already gave them a couple of nice entry on Friday, didn't it? It gave that nice buy. Yeah, this one, such a clean entry. Gave like what 16R. That was a very clean entry. It gave this, and now it swept these lows. You see. So it swept all these lows, all this order flow that was generated here in that 4-hour POI. It's still in the 4-hour POI, right? But the thing is now the 5-minute chop to happen is actually all the way up here.
Yeah.
Right? So like it can happen. Like I've seen it happen. We'll just wait because I'm gonna put my alerts simply on here. Oh, here.
Okay.
You understand? You see this is like all you need to do. Literally, like you set alerts and wait for it to do something, right? Because that's what high probable trading is. Like, it's boring. it's a lot of patience, but honestly, when you get the trade, you pass things faster than anyone else. Like it's a crazy way that it works, you know. So it comes into here, maybe again, give me a 5-minute or 50-minute chalk, and I'll look for entries in that way, right?
So, bro, hey, what's up, Cash, man?
Yo,
but just a quick question. So let's say you have your alert here, right? And just wicks it, and then it takes out this. Would you then look?
Oh
for
yeah,
again,
yeah. That's good as long as it's still in here. Yeah, of course, definitely.
All right, thanks, man.
Yeah, 100%. So that will be a 5-minute range. I'll get a 1-minute POI, get a 15-second chop. Exactly, rinse and repeat the same entries that has happened like over and over again. Like happened here, it happened here, like it's happening like all the time, man. What was the other one? Yeah, it was. Oh yeah, it was here. So this trade too. When was that? On the 9th. Yeah, happened here, happened again here. Like it's the same thing always. Like rinse and repeat. Rinse with the same thing. Like 5-minute chalk. You know. Then you come in, get that 1-minute POI, which is this whole candle here. Right, it comes in. I mean, like I'm not gonna do that. Right. It is all this candle here. Right. And then obviously gives you that 15 seconds chalk here at the bottom. You see how there's no 15-second chalks at the first time it touches in? It's just like bearish, and then bearish, bullish. Switches, entry, bang. Yeah.
Okay, man. Thank you.
Yeah, no worries. Anything else? Let's see. If price taps the forward demand or supply is enough, is enough open mitigation or need deeper? No, literally, like it can sometimes just tap into it and then give you the entry, like give you the chalks. So like, yeah, like you don't know where it's gonna happen from. It doesn't have to come into 50% no. Like it can happen anywhere, to be honest. So just have to make sure you're taking clean chalks, you know, like not some little inside board chalks or something like that. It's got to be proper order flow chalks, like these order flow chalks. You get me? First time in my life I have, okay. Sick. We're gonna end it here because it's been like 2 hours. So like I'm gonna go and get some breakfast and I'll catch you later. So hopefully that helped. And yeah, man, I'll upload it in a bit.
Cheers,
no worries. No worries.
Thanks, man.
Yeah, no worries, man. No worries.
It's lunchtime, mate. It's not breakfast.
Mate, if you don't sleep and it's always breakfast. Like it's not even the day's not started yet. But yeah, no worries. Wicked. Like wasn't everyone's on the same page. Everyone's understanding, and that's the main thing. You see, like a lot of places you learn from and stuff, and everyone's like half confused. But like yeah, love to see that. Wicked. All right, man. Peace and love, and have a great day, and take care. See you later.
It is.
Bye.
Cheers, man. Thanks.
No worries.